Hey friends, welcome back to another episode of Making Sense of Your Market. Wow, today is going to be, a lot has happened over the last few weeks with the debt ceiling issues, the U.S. Credit being downgraded, our financial status being downgraded, and mortgage rates just skyrocketing back up into the sevens. Not good. It's largely due to three things, and that's what I'm going to spend a couple of minutes talking about today because I feel like I have this conversation about 5 to 15 times a day. So I want to make a short video on this. One, if you are an existing client of mine, you've heard me say this, but you need to hear it again, and I have some updated info that will help you. Number two, if you're a realtor, you have to understand this, okay? Number three, if you're a past client of mine, you've probably seen a lot of stuff on the news that could be somewhat confusing. And I think this will help maybe ease your mind in regards to the economy and what's going on. So today, it's Friday, June 2nd, 2023. May just flew by. I can tell you that the housing market is back. We're seeing multiple offers again, despite high interest rates. This is a sign that as and when interest rates come down, the housing market is going to be back on fire even more, potentially even more than it was during 2020 and 2021 because we have a lack of inventory, okay? But I do believe when rates do come down, sellers that have those really good 2% and 3% rates already on their existing mortgage may be more inclined to list the house that they wanted to over the last year. So total side topic. I'll do a video on that later. But for now, the three things that are really impacting mortgage rates over the last week or two that caused them to go up, a couple of them have worked out some of their kinks. And what we've seen since the U.S. came to an agreement on the whole debt ceiling issues, we've seen mortgage rates come back down. We saw them crest up back over 7.5% on 30-year fixed rates. Now they're back down under 7 at about 6.8 to 6.9, maybe 7, depending on your credit score. It's not a rate quote. This is just a range. But I tell you this because you have three things right now that are really all happening at once that are impacting the markets, and it's causing confusion and fear in the markets in general, whether it be Wall Street in equities or Wall Street in bonds with investors. Number one, you have the debt ceiling issue that it looks like they've come to an agreement. They're just getting that passed. Number two, you have our credit, our financial score, if you will, worldwide in the U.S., that could possibly be downgraded. That's not necessarily a good thing. And then number three, you've heard me talk about this for last year, inflation. This is what I want to focus on today. So the Fed came out over the last week, and they've been very clear that most likely at their next meeting, they will not raise the Fed rate. So if that continues to happen, if you go and you look at this information I'm going to put up on the screen right now, every time the Fed drops or lowers the Fed rate or doesn't increase the Fed rate after a hike, mortgage rates fall right after, okay? So that, I don't like using the word crystal ball, but we kind of just got handed a crystal ball, if you will, from the Fed. Now, we need to pay close attention to that because they may level off and then may raise it again. I just don't think that that's going to happen. So that's some good information right now, and it's also some information to follow down the line, and I'll keep you posted on that. I believe mortgage rates, like I've been saying for the last year, we raised in the U.S. the Fed rate to beat down inflation. We've now started seeing inflation slowly, not fast, but slowly come down. So as inflation comes down, so will mortgage rates. So that's big. We saw a lot of positive movement in the markets this last week as they came to an agreement on the debt ceiling. So we got two out of those three things maybe working themselves out. Maybe the third will. But we have CPI, so those are inflation numbers for for May coming out on June 13th, okay? And then we have the Fed meeting on June 14th. So in about 2 weeks, we'll have more information. I expect mortgage rates to improve in the next week or two and possibly improve even more mid-month. I'm not making any bold predictions here, but just based off the data, that's where I think it's going. So if you have any questions, please reach out to me. I want to close with this. People ask me all the time, Dan, is it a good time to buy? Is it a good time to buy real estate right now? I have been saying for the last 6 months, yes, it's a great time to buy, possibly the best time since 2012 to buy real estate, because we're down at the bottom. And even though rates are high, you have an opportunity to secure a home that you know is going to go up in value, and you know that rates are going to come down so you can rework or refinance your mortgage. Now, it's one thing for me to tell you that. It's another thing for me to do that. My wife and I just made a big decision to upgrade and buy the home that we'll live in most likely for the next 7 to 12 years. And we just closed on that last week. So not only am I giving you this advice, I'm practicing exactly what I preach. I think it's a great time to buy. I think I got a great deal on this house. I do not like my interest rate, but I know it's going to come down in the next 6 to 12 months. So I hope you can take this information that I gave you at the very beginning, and that might lower your anxiety levels in regards to the markets. And then also, as I close today, this is a great time to buy real estate. I'm doubling down on real estate. I'm personally doing it myself and encouraging all my clients to do so as well. If you have any questions this week, I want you to reach out to me, but make sure you go out and you enjoy this beautiful weather that we're getting blessed with right now. And I'll see you next week for another episode of Making Sense of Your Markets.